We need to get to some breaking news. Pinterest out with its earnings results. We can see shares popping after hours. Ness, what do you have?
Yeah, that's right, Shauna. And it's a top line beat for Pins with $666 million. And the adjusted earnings per share came in as a miss 11 cents. The street was expecting 14 cents. But the monthly average users, that came in as a beat, coming in at 433 million. Still a decrease of 5% compared to the same quarter of last year, but nonetheless, beating what the street had been expecting. The average revenue per user, ARPU, that came in line with expectations at $1.54. And I think that the street is relieved, and that's why you're seeing the stock up in after hours, because these are the comments from Bill Reddy, the new CEO of Pinterest. Remember that he came from Google's e-commerce. So he said Pinterest achieved 9% revenue growth year over year in the second quarter, or 10% revenue growth on a constant currency basis, despite uncertainty facing our advertisers. He went on to say, we accelerated our investment in shopping and e-commerce this quarter. So as you can see, shares reacting positively in after hours, guys.
And this is interesting looking at this earnings results. It's okay. It's decent, not great, but yet we're seeing a lot of excitement in the stock with shares up about 15%. Again, a miss on the bottom line. Adjusted earnings per share coming in at 11 cents. The street was expecting 14 cents. Revenue of 666 million. Rochelle, when you take a look at the monthly active users, 433 million. It was actually better than what the street was expecting. That 429 million was what the street was bracing itself for, but it's still a drop of 5%. So we're still seeing Pinterest struggle here as they try to expand their audience.
And it's interesting because when you think of Pinterest and you try and classify it, it's part social media company, it's also a shopping website, it's pretty much a vision board for a lot of people as well. So it's interesting to see how it's going to then find its market with the consumer. Where does it go from here? It's still growing with its consumers. We know that it continues to add advertisers, but we also have to keep an eye because, as we know, ad revenue also slowing for a lot of companies. So it'll be interesting to see their guidance when they have their conference call after this earnings result.
They do have a new app on the way, Shuffles, which is one area that they're going to look to diversify. But largely speaking, this is kind of the story of the last couple of weeks. It wasn't great. It wasn't as bad as we expected when you go back to Alphabet. And a lot of the earnings we saw in the social media sector, they were bad, but they weren't as bad as some anticipated, with the notable exception of Snap. Once we got those Snap earnings, everyone expected a cascade of devastating reports, and we haven't largely seen them. The ad environment has held up okay, given recessionary fears. And I guess that explains, I don't know if it explains a 17-point spike in the after hours trading, but it certainly is the story thus far the last couple of weeks in the social media and tech space. Bad, but not as bad as many expected.
Yeah, certainly. And taking a look at some of their guidance here, they see third quarter revenue up to the mid-single digits here. So that could be, I guess, a bit of a piece of good news. But 2Q revenue up 9% year over year to $666 million.